All right, everyone, welcome back to Crypto Brain. And before we begin today's breakdown, make sure you subscribe because here we focus purely on structured analysis, market behavior, and smart money activity rather than emotional hype. And if you want to stay ahead of developing crypto narratives, this is exactly where you need to be. Now, today's headline is extremely important and very specific. Toshi Whale Holding. Because right now what we're seeing inside the Toshi market is not random price movement, but a structure that is starting to reveal signs of large player involvement. And whenever whales begin positioning quietly, it usually means something much bigger is building beneath the surface. As we move through the chart, the first thing that immediately stands out is the way price is reacting around key levels, because instead of aggressive continuation, we're seeing controlled movement with repeated rejections and stabilization, which is a classic sign that liquidity is being managed rather than freely traded. And this is where the concept of whale holding becomes critical. Whales do not enter the market. Why? The emotion, they enter with strategy, and when they build positions, they prefer zones where price appears slow and uncertain, because that is where retail participation is weakest. And right now, the behavior of Toshi is clearly reflecting that kind of environment where price is not exploding yet, but it is also not collapsing, which creates the perfect condition for accumulation or holding. Now, if we look deeper into the structure, what becomes even more interesting is the consistency of support being formed, because every time price dips, we're seeing absorption on instead of panic. Selling and absorption is one of the strongest signals that larger players are defending their positions, because if this was a weak market, those levels would have broken much faster. This is exactly why the current phase is not about excitement, but about positioning, because markets usually move in cycles and the holding phase is often the quietest, yet most important stage before expansion begins. And if whales are indeed holding position sheer, then their next move is not likely to be small. Now, coming into the breakout discussion, this is where things become extremely sensitive, because breakout levels are not just lines on a chart. They represent zones where liquidity shifts from one side of the market to the other, and right now, Toshi's approaching a range where a decisive move is becoming more and more likely. If price manages to break above resistance with strong participation and follow through, then what we could see is a rapid expansion phase, because once price escapes a controlled range after accumulation, the lack of available supply of 10 leads to aggressive upside movement. And this is where relator tail typically starts centering the market. However, at the same time, we cannot ignore the opposite scenario, because if this level fails and price breaks downward with confirmation, then what we're seeing right now could shift from holding into distribution. And that would completely change the short-term outlook, because instead of expansion, we would see our liquidity sweep to the downside. This is why professional traders do not predict direction, they wait for confirmation, because confirmation is what separates shy probability setups from emoti. On our trade sand right now, the confirmation zone is clearly defined by the breakout range that price is testing. Now, adding another layer to this analysis, we need to talk about the war narrative, because narratives in crypto have the power to accelerate moves beyond what technical structure alone would suggest. And recently the market has started connecting Toshi with broader external developments, and when uncertainty or tension enters the narrative space, attention increases, and when attention increases, liquidity follows. This does not mean the market will automatically pump, but it does mean that volatility can expand very quickly, because narrative-driven moves are often faster and more aggressive than purely technical ones. So this is exactly why combining whale activity with narrative context becomes extremely important. At this stage, the smartest approach is simple observation with discipline. Number 1, watch how price behaves at the breakout level. Number 2, monitor whether volume expands during the move. And number 3, pay attention to whether momentum sustains after the breakout, because sustained momentum is what confirms real moves, while weak follow-through usually signals traps. If whales continue holding and breakout confirmation appears, then the probability of a strong upward move increased significantly, and the expansion phase could begin much faster than most traders expect. But if confirmation fails and selling pressure increases, then the market could quickly shift into a downside move, catching late buyers off guard. So right. Now, Toshi is not just another chart, it is a market sitting at a decision point where whale behavior bray, coat structure and narrative influence, aerial aligning, and when these elements come together, the next move is usually not random, it is decisive. And this is exactly why staying patient and analytical matters, because in crypto, the biggest opportunities don't come from guessing, they come from recognizing when the market is preparing for something bigger. Stay analytical, stay disciplined, and watch the structure closely, because the next move in Toshi could define the direction much sooner than the majority expects.